Welcome to our weekly market review. It's brought to you by ETM Analytics and Treasury One. As per usual, I'm joined by Treasury One's currency strategist, Andre Cilliers. Andre, we always expected the end of 2025 to end with a bang, and it feels like that is what's happening. In fact, the last time we spoke, the US government's doors were still shut. And now that it's been reopened after they found a way to mediate their way out of it, we are finally seeing a slow comeback of all the data, of all the investors were waiting for and traders were waiting for. It's kind of coming to the fore to really give us a better idea of this economy, which is the US, which remains resilient despite everything going on.
Yes, good morning, or good afternoon, rather, it's already there. But I think let's start off not with the US, but a G20 that's over in Gauteng. I think most people in Gauteng is extremely happy that it's over. I think they've had enough blue lights and sirens over the weekend. But that's behind us, and it didn't go too bad. The US wasn't here, but most others was here, and they're very happy with it. I saw that on X. Mr. Modi had posted quite a few photos.
He had a wonderful time.
So I think we were in the news, and I think it went well. So, and nobody's injured or anything. So back to the US. They are working. And on our first slide here, we can see key events for this week. 1, 2, 3, 4, 5, right up to 10, including a market that's closed on Thursday for Thanksgiving. So it's a short week. It's actually just really 3 days in the US, packed with data, PPI. But look at the dates: September PPI, September retail, and then November, October. So it's a mixed bunch of data sets coming out, which is eagerly awaited. And then shortly after that, there's a Federal Reserve meeting, and these figures become extremely important for the Federal Reserve to make a decision on to what are they doing with interest rates. Now, one of the members of the Fed over the weekend came out saying, there is room to cut. The federal president, Mr. Powell, said we have to be cautious, look at data. Here comes the data this week. So I just want to say nobody really knows what's going to come out of this. The fact that the economy is looking fairly resilient lies also in the fact that the fixed data, or the data sets that comes out as a mixed bunch. Some gives good news, some give bad news. One simply do not know how the Federal Reserve will act on these data sets. We can speculate on it. If I were to speculate on it, I think they're going to hold off. They're not going to cut interest rates right here at the end of the year. They're going to hold off into the new year and remain data dependent. That's my feeling. So I think we're close, ever so close to a year that will dwindle down with not too much happening, with not too many upsets or anything. The major one that is currently on the going, and remember that was discussed here in South Africa by the European leaders, is the Ukraine-Russia war. The Europeans not very happy, but Ukraine being pushed in, I think the date is the 27th, where they have to make a decision. They have to give up some of their land that's already been taken over by Russia in any case. Then they have to sign an agreement that they will never apply or join NATO, and they have to make their army smaller. So the Europeans not too happy with it, but we'll see what comes out of it. But at least there's directions heading into a peace agreement between these. We'll see whether it gets signed or not. So that's about the bunch of stuff that we have here lying ahead of us.
If we pull back a little bit on the US, I think, like you said, we don't know exactly what's going to come out of this data, but if there's an outlier and it beats expectations, whether up or down, I think when you back that with what we're seeing happening in the equity markets, there's kind of this nervousness right now because at face value, your gut tells you that the markets seem overvalued, although there are obviously fundamentals pointing to, they're still in safe territory. And I think that could cause some market volatility. So that's something definitely that's going to be interesting to watch. But like you said, there's so many cross currents towards the back end of 2025. You have the Ukraine peace agreement, like you said, which could be a significant move. But we also must remember the Indo-Pacific tensions are rising. China, Taiwan, US, Japan. That's been rising now for the last couple of weeks. We have the US threatening Venezuela. So, we've got all these things. And actually, I'm not even mentioning what's happening in Israel and Gaza as well. So there's a lot of cross currents that's not just data that can really feed into markets and cause some wobbles towards the back end of the year. Like I said, either up or down. It's going to be interesting to watch. And out of South Africa as well. I know we hosted a successful G20. Everyone is crying that it was a diplomatic masterstroke. I believe it was the only option for them to have a diplomatic masterstroke, because the other one would have been just to carry away something that China and Brazil and India would not have supported. So, we did well with that. I do fear that we might have poked the bear. So I'm looking to see whether or not there will be a reaction going forward, but that could perhaps only play out in 2026. But speaking of South Africa, we have our own slew of data that our Reserve Bank and everyone else will follow to see where our country is positioning as we enter the last part of 2025.
Yes, at least we've got lower interest rates. So there's a few people that's happy with that. The people with the bonds and the car loans and everything, they got a little bonus at year end. Don't think it's going to do much for the economy in terms of growth, but it will help a little bit in giving that bit of money that the people can spend in terms of that income for the Minister of Finance at least. So, but not going to add that much. So that basically is it for us in terms of interest rate declines, as far as I'm concerned, right up to the middle of next year. The Rand didn't budge that much on it, gave up a little bit, but I think that's also got to do with the dollar movements. So I think the Rand is really just following international movements at the moment. It's going to continue following international movements. The 1750 on the top side is a tough nut to break and go through it. So I think that will hold. And on the bottom end, I think 17 becomes a tough nut to break. So I think 60, 90, 1735 is most probably our trading range, slightly above the 35 levels. I think exporters should start taking, covering their short-term commitments. And below the 17 and towards the 17 end, importers should most probably look at getting themselves covered in the short term, especially over the festive season, when markets can be thin and show a little bit more volatility. But overall, with all the cross currents and everything going around that you spoke about, I think we're dwindling down for this year with not too much on the cards. Major changes.
I think everyone is welcoming that dwindling down towards the end of the year. It's been an up and down 2025, to say the least. But Andre, thank you very much. And we will then catch up again next week.